that I will totally accept the results of this great and historic presidential election if I win.
The upcoming US election between Kamala Harris and Donald Trump is coming up fast, and as traders, we need to know how this could impact the market.
Strategas is
Avalone.
It was doing well.
We've also
This was the year of elections globally, and they're moving the markets. Of course, we look to the U.S. and wonder whether that's going to be a big market event, too.
How will the markets react if Trump gets reelected, and what changes might we see if Harris takes the lead?
This goes back 95 years, almost a century of price data here, and the big takeaway is stocks go up.
US elections are coming up fast, and we've seen quite a few dramatic events lately. On July the 13th, there was an assassination attempt on Donald Trump during a campaign rally in Butler, Pennsylvania,
where an assassination attempt was made.
And shortly after that, on July the 14th, Biden announces that he will be dropping out of the race and endorses his vice president, Kamala Harris, as his replacement.
So I've decided the best way forward is to pass the torch to a new generation.
It now seems like Harris will be running against Trump. To understand the potential market reactions, let's first take a look at the historical context. Now, historically, US elections have had a significant impact on the financial markets, driven by economic policies and political stability promised by the candidates. For instance, in 2016, the markets reacted to Trump's election with an initial move to the upside.
Was expected if Trump was going to get elected.
Potentially due to expectations of his pro-business policies and tax cuts. On the other hand, Biden's election in 2020 occurred during the pandemic, presenting unique challenges that we aren't seeing this time around. His focus was on economic recovery and healthcare in a global crisis. If Trump gets re-elected, could we see a continuation of his pro-business policies? This might include more tax cuts, deregulation, and a focus on boosting domestic industries. Markets have historically reacted quite positively to policies that reduce corporate taxes and regulations, as these can increase corporate profits. However, it's also important to consider how Trump's trade policies and geopolitical tensions could introduce volatility. On the other hand, if Harris gets elected, could we see a continued focus on economic recovery, healthcare, and climate change? We don't really know a lot about her policies, but considering the fact that she is Biden's vice president, we can assume that their stances are fairly similar. While these policies may not be as immediately bullish for the markets as tax cuts, they could lead to long-term stability and growth in sectors like renewable energy, healthcare, and technology. The economic environment has changed significantly since the last election. The pandemic heavily influenced the market's reactions in 2020. Now, with inflation being a major concern, the next presidential term will likely focus on managing inflation and economic stability.
Bad news about prices in the grocery store.
Historically high inflation.
Biden's administration has implemented significant fiscal measures, like the $1.9 trillion American Rescue Plan, which aimed at economic recovery, but also contributed to inflation. Now, I'm sure that you've all seen the effect that high inflation has had on people's everyday living expenses. With that in mind, it's obviously not surprising that people are going to be very focused on the question of inflation in the upcoming election.
This chart shows consumers' confidence in the economy during the Biden and Trump administrations. As of June 2024, confidence in the economy under President Biden averaged nearly 28 points lower compared to during former President Trump's term.
In contrast to Biden's policies, Trump's approach might involve more aggressive tax cuts and deregulation.
On a mission to try and woo some of them over, which is why he's talking about lower taxes and
potentially boosting short-term growth, but also impacting long-term fiscal stability. Cryptocurrency policy is another area where Harris and Trump has very different approaches. Biden's administration has taken a cautiously regulatory stance aiming to protect consumers and ensure financial stability through oversight.
what we see is quite a lot of turmoil. We see fraud, we see a lack of transparency, we see run risk.
On the other hand, Trump has embraced a more pro-crypto stance, advocating for a more relaxed regulatory environment that encourages innovation.
If you think of it, it's an additional form of currency. And I used to say, I want one currency, I want the dollar. I feel that way, but I will tell you, it has taken on a life.
He has promised to protect Bitcoin miners and crypto holders from what he describes as the current administration's regulatory crackdown.
If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be. It's not going to be made.
And he also opposes the introduction of a central bank digital currencies. These divergent policies can significantly impact the cryptocurrency market depending on the election outcome. The Federal Reserve, often referred to simply as the Fed, is responsible for ensuring market stability through monetary policies, including setting interest rates and regulating the printing of new money.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money.
Importantly, the Fed is designed to work independently of political influence to maintain long-term economic stability.
Independence by a central bank to make tactical decisions about implementation of monetary
However,
policy.
history shows us that this independence has actually occasionally been compromised. A notable example is President Nixon, who pressured the then Fed chairman Arthur Burns to adopt expansionary monetary policies ahead of the 1972 election. This interference led to significant economic consequences, highlighting the potential risk of politicizing the Fed. And Trump has previously expressed his desire for more influence over the Fed, criticizing its policies and suggesting more control over its action.
And quantitative tightening by the Federal Reserve, which were, in my opinion, far too fast an increase and far too slow a decrease.
This could impact the Fed's independence and policy decisions. But regardless of the outcome of this, elections often bring volatility. So it's crucial for traders like you to be prepared. Make sure that you stay up to date by checking the economic news calendars and exercise caution when making trading decisions. Volatility can and will present both risk and opportunities. Being prepared and staying adaptable is key. And that's it for today's video. If you found this video helpful, don't forget to hit that like and subscribe and hit that little bell notification button. Do you have any questions that you would like us to cover? Please drop them in the comments below. Take care, and I will see you guys in the next one.